This podcast is sponsored by Tusk, an open source non-ICO crypto project powered by community. Check them out on the web at tusk.network. That's TUSC.network. The Rob McNealy program is the nexus of cryptocurrency, blockchain technology, and entrepreneurship. Now, welcome to the program. Hey, Rob McNealy here, and today we are talking to Haider Rafique. He is the Global Chief Marketing Officer of OKCoin, which is an American-based cryptocurrency exchange. And you don't hear a lot about American exchanges too often because there just, frankly, aren't many of them. But I wanted to get his take on the crypto world, and so let's welcome to the show. Haider, how are you today?
I am well. Thanks for having me.
Well, I appreciate you coming on the show today. I think based on some of our earlier talks, you got a lot of really, really good insights. And I wanted to share some of those with our audience. Before we kind of jump into that, though, can you give us a little bit about your background? How did you get into the crypto space and how did you join the OKCoin team?
My experience with crypto started when I left Microsoft. I believe it was 2014. And I was playing around with an e-commerce idea that we had with two engineers from Microsoft. We ran into a payments problem. Most of our customers were coming from China, South Korea, India, and those markets. And by allowing Bitcoin as a form of payment, we were able to increase the amount of orders we were able to fulfill on our e-commerce platform. So that was my first exposure to crypto and Bitcoin. I ended up working for a few years in enterprise product marketing, B2B product marketing for a software company, only to find myself in 2017, like most of us, and the sense of urgency that, hey, I should actually go work in crypto. It's more exciting than what I'm doing. I got fortunate. I ended up becoming the first head of growth at blockchain.com, spent 2 years there. Building out their growth function, their marketing function, and also their monetization while I was there. And I was hooked. I was in the rabbit hole deep. When I decided to leave blockchain, I was looking for the next gig I wanted to take on was something ideally at an exchange. And I came across OKCoin along with a few others. And OKCoin was fairly unique in what they were trying to build. And the leadership was one that I really resonated with. So that's how I ended up at OKCoin. There's a lot of exciting stuff going on here.
So what would you say differentiates OKCoin from some of its other competitors, both globally and domestically?
So we are a global exchange. Oftentimes what the question I get is, are you guys the US entity because you're now headquartered in the US, are you a US entity for OKCoin? Are you similar to, say, for example, Binance US? And we're not. We're actually truly a global exchange. And the difference is we're actually headquartered in the US, in San Francisco. The way we differentiate ourselves is ultimately at a very macro level. The reality is, Rob, we all have a lot of choices when you think about buying crypto. Whether you buy crypto through a wallet product or you buy through an exchange, there's just so many brands out there for anyone to choose from. What we try to do differently is we try and ultimately create an experience that is going to be really meaningful for the customers. We're on that journey. Are we there 100%? Not yet. But we're working really hard towards essentially differentiating on customer experience. So part of that means we're not going to maliciously charge customers fees, high fees. You're seeing that happen in the industry. So our fees are very competitive in the industry. We're about one of the lowest fees exchanges out there. We're also a fiat-based exchange for retail investors who don't know that language. It's essentially the ability for anyone to link their USD account, say your Chase or your Wells Fargo account, very easily with the crypto exchange, just like you would with any traditional brokerage firm like TD Ameritrade or Fidelity, and being able to make a deposit and use that deposit to buy and sell and trade crypto. So in addition to that, we're constantly adding new high quality projects and assets on our exchange. So we're giving investors and traders exposure to those emerging investment opportunities. Generally, when we step back from all of this, I think the ultimate goal for OKCoin is to be the best at customer service and customer experience. And like I said, we have a long way to go.
So one of the things that I see is has been a barrier to adoption of cryptocurrency. It has been the difficulty in using crypto, the on-ramps, the user experience, user interface. What are some of the things that you're doing with OKCoin that maybe helps that out a little bit and simplifies that for more unsophisticated investors or people that are new to cryptocurrency?
Yeah, the relationship I would share with you is when you think back 20 years ago and there weren't any digital brokerage products, or if there were, very few people used it. Typically, an investor with some disposable income and savings and a portfolio would go through a financial advisor. They'd call them up and say, "Hey, how should I get exposure to the markets? What should I invest in?" That kind of thing. And that financial advisor would tell you how to allocate or how to allocate your savings, essentially. With digital brokerage firms, that sort of paradigm changed a little bit. People want to believe that they can actually take ownership of their investment decisions. So now you're seeing this over the last 2 decades, you're seeing a wave of retail investors, people with disposable income and savings, signing up for these brokerage platforms and learning about what are bonds. How do I buy stock really easily? How do I get exposure to X company or that company? How do I read earnings reports? So on and so forth. So the user now, the customer now is a lot more savvy than the customer, say, a generation or two ago. They're more familiar with these financial tools than they were previously. Crypto is hard. There are a couple of aspects to crypto that have been really challenging for us onboarding a big wave of customers with disposable income, with an appetite for investment exposure. The reasons are, like you teased up, historically, it's been really hard because of regulations and compliance and what have you to work with banks. That world has changed a little bit. Now you have products like Plaid you can integrate with, and it's really easy for anyone to use their credit card or their bank account, ACH rather, to fund their account. This is as simple as, say, downloading the Uber app and linking your bank account to it so you can start using that app on a regular basis. So the world looks much easier now than it was, say, back in 2017, when it was really hard to get to purchasing crypto somewhere. And even if you did it, the trust factor wasn't there. So a lot of people kind of shied away from it. So that has become easier. I think the part that really still needs a lot of work is oftentimes what I see, having worked at now second crypto company and advised a few in the middle, is we are still using nomenclature and language as if we're speaking to engineers, as if we're speaking to people who actually understand crypto already, have been in it since its formation. But what we're not doing a great job of is rewriting the way we talk to our customers in a way that they understand. And the way OKCoin looks at customers is a couple of different ways. We look at customers as folks who have not had any exposure to crypto. They've heard about it at family dinners or through a friend or through their financial advisor, and they're intrigued. They want to sign up for a trusted platform, one that they feel secure, their money is not just going to evaporate. Somebody's going to just, get off the radar and their money's gone. And then there's another segment of people, which is, essentially people who've actually been trading a little bit here and there. They're not professional traders. They have a full-time job, but they like the aspect of trading. They're a little more savvy. And even for them, this crypto language that we have is sort of new and intimidating oftentimes. And then you've got the third category, which is like folks that are just day traders. This is what they do and live and breathe. And what we're finding is even those folks, that segment of people who haven't traded crypto previously, come into the crypto ecosystems and they're kind of lost. They have to spend a lot of time educating themselves on, what does DeFi mean? Ledger mean, or what is an explorer? All this kind of stuff. So a lot of the things that we're trying to do at OKCoin, and we're not there yet, is fundamentally create a product, create an experience that welcomes everyone, any investor, any trader, not just the crypto traders or investors who've been in it and have high conviction and understand some of these things.
Well, I think one of the things you are kind of alluding to is the ease of use and that abstraction. I agree with you. Most of us in the crypto industry, we take for granted that our audience understands, all these weird nuanced things about the technology and the language. But I think if we look at how we can abstract that away, I think that's important. And I think, crypto projects would be best served if they tried to figure out how not to educate people. I think that's really difficult, right? To try to educate people on a new technology. People, for instance, don't know how credit cards work. They don't know all the middlemen, the Swift technology and all that kind of stuff. People don't know that. They just know their credit card works. And I think that's one of the things that I see have been missing from the conversation with dealing with the masses is, not about how we educate, but I think we need to focus on, how do we abstract all that technical stuff that people really don't need to know in order to leverage and use the technology. What do you think?
I agree with you. I think a lot of the early projects that actually are trying to build or have a great utility or a use case are often creating the project or the product in a way that captures the network that's really fully sold in and knee deep in this stuff, because it's easier for them to onboard into a product, give them feedback, so on and so forth. So you have these like pockets of networks and communities that are being built around each of these protocols or assets or projects. And those folks are not your retail investors. So you keep seeing a shift of like these 30, 40, 50 million, crypto users around the world who go from project to project. But what I'm not seeing is this like high velocity of increase in adoption. We have a lot of people in the world, not just 30, 40, 50 million people. And I think that onboarding new customers and new retail is not happening. My fear oftentimes, maybe fear is not the right word, is competitively speaking, we don't necessarily focus on competition. We focus on customer experience. But as a marketer, I don't worry about, the other exchanges or other wallets and what they're going to do or what have you. Oftentimes my worry is that we're in crypto, we're doing all the hard work from an engineering standpoint and technology standpoint. And here comes traditional brokerage firms or consumer apps that have the trust of consumers, and they're going to come in and turn on the knobs and now offer really easy exposure into crypto and win majority of the market share that's there to be had for us in crypto. I think that's the biggest risk to crypto industry is traditional finance and fintech coming in and reaping the benefits of what crypto engineers have been building over the last 10 years or so.
Well, I think crypto is doing it to itself, though, to be honest. And I've been in this space for more than 3 years now, which is in dog years is a long time, right? But as a project, I'm always looking at what other projects are doing or not doing as far as, doing outreach to other communities outside of the existing crypto community. And at least with us, we've tried to focus on with us to not cannibalize. I'm not trying to steal people from Bitcoin, right? I'm not trying to steal Ethereum people and bring them in our community. That's not our focus. Our focus is bringing in people that aren't already not in crypto. And I think one of the reasons people aren't doing it is hard. Okay. It's hard to go and do that marketing. It's hard to go knock on doors and do traditional sales. And I think there's a couple of reasons for that. I think one of the reasons is developers and engineers hate those activities. They don't typically like to do business development and sales and marketing. And so they don't. But I think the other thing is that going out and knocking on doors kind of goes against that ethos of decentralization, because now you have a centralized sales and marketing function. And a lot of people don't like doing it. It's hard. And I do believe long-term, the projects that exist now that start focusing on those activities are going to be the long-term winners. And I agree with you. I think and it's inevitable that traditional finance is coming into this space. The question is who's going to be left standing after they do. And I think that those are things that people in the crypto world probably really need to think about.
Agreed. I absolutely agree with you. I think it's going to be an interesting next few years. There's so much opportunity for all of us, I think, to get out of our comfort zone and see what we've not typically been comfortable with doing. I think there's this sentiment in Silicon Valley or in tech or even in crypto: if you build, they will come. Well, the reality with that notion is, if you build and they will come takes you to a certain point in your product. And then you hit a saturation point. Take a look at Uber. They were running marketing campaigns, meaning they were creating flyers and shipping them to people at their homes at a certain period of time. And eventually, Uber was doing out-of-home billboard ads. They did all kinds of marketing to get to becoming a household brand name. All products do. eBay did it. PayPal has done it. My hope is that crypto, not just at OKCoin, but the entire industry gets out of that comfort zone and realizes that if any of us want to become a household brand name, we're going to have to look at the playbooks of previous consumer brands who've done it really successfully. And what have they done that we're reluctant to do? And how can we learn from them?
Well, it's interesting. I read an article not too long ago about that exact thing. Like, what did the top tech companies do to get their first, 10,000 users? And it's pretty interesting to see all the little legwork that those guys had to do. And you wouldn't even think that those guys were hustling, but every one of those guys hustled. I mean, even watching what Etsy did and Uber and Airbnb and some of these projects, it's a really good little historical research project if you or anybody in the audience has time to look at it. And we have, because we believe that is going to be important, and you have to have a plan to do that. Because I'm not a developer, so I think of things a little differently. I'm more of a marketer like you. And when you go and look at, I view crypto, even a decentralized crypto projects, they're still a product, right? They're still a service, and they're not somehow above the laws of marketing or supply and demand. And this is where that, like, it's interesting, because there's a lot of engineers in Silicon Valley that get this, right? These tech engineers and these tech companies get that. And it seems like it just hasn't really translated yet to the crypto projects. And I really don't know why that is yet. But I still think that there's a lot of opportunity there for the crypto products that do that. And I think in the next probably 5 years or so, I think the projects that do focus on those things are going to be coming out in front after the hype. And what I was saying earlier is about cryptos doing it to itself, is that we're getting all excited about, I would argue a lot of these DeFi projects and ICO kind of projects, they take away from the attention from the more legitimate projects that are doing the dirty work and focusing on just wheels down kind of stuff. And I think we're cutting our own legs off, so to speak, because we're focusing on just getting rich quick in these really obnoxious ROIs with yield farming and things like that, and that takes all the excitement away from, like, oh, you guys are actually building something long term. And I don't know what to do about that. Like, I can't control that, of course, but I mean, what do you think? I mean, you're in an exchange. I know you guys have been listing a lot of DeFi projects lately as well. And is this something that's going to be a permanent thing, or is this just, the fact is, we're riding another hype cycle?
It's a bit of both, I think, but don't quote me on this, because I'm not an economist. I think the way I look at it is, the other day I got an ad in Gmail, in my Gmail account, which was from Marcus by Goldman Sachs, and it had this interesting message, which was, get the highest yield on your savings if you deposit to Marcus, and we offer a yield higher than national average. So I went on their website, and the yield that they were offering on deposits was 0.6%. I believe it was 0.6%. And it occurred to me, having been deep in DeFi now, especially the last month or so, going through our listing process, we have crazy numbers in DeFi. The reality is, again, what does DeFi even mean to a regular person? Do we even need to say that it's a DeFi product when we market this stuff, or do we actually focus on the utility? Do we focus on, hey, if you put X money in, here's the APY you can earn, and here's why it's important. We're in an economic downturn. There's a really high unemployment rate. People are depleting their savings. The market's sort of really volatile. So people are looking at other instruments in which they can protect their investment and their savings. And in dire times, like, have an outlet where they're able to creatively earn money, for the lack of a better term. We offer in DeFi, there are protocols offering 60% APY, even more than that, right? And sure, there's a volatility in that number. But the reality is, the way I think about it as a marketer is, this is not about DeFi. If we go out there, if and when we launch our own earn product, and we go out there and we position our earn products as, hey, participate in our DeFi ecosystem or what have you, we've failed. Because again, we're going after capturing that crypto user, not the folks that actually really, really need this stuff, that have taken a hit because of COVID the last 6 months or so. So if this is true, then how do we position this stuff? Ultimately, the utility is you have exposure to higher APY, a ridiculously higher APY than what you would find through traditional banks, Marcus being an example. So why don't we go out there and not include any DeFi language and just say, subscribe to this or opt into this or put your deposit into this product, and you get between this and this percentage APY, which is much higher than what you would find in traditional markets. Now, the obvious question anybody who's not in crypto among my network asks me is, well, what's the risk? Because crypto has this, the optics and perception that it's a tulip mania, it's the Wild West, there's no regulation, your money can just completely evaporate. I think that world has changed. I think it is a lot more trusted now. For example, at OKCoin, all your USD deposits are FDIC insured. So things are happening in terms of winning trust from customers. But ultimately, any yield product, high yield product, even if you look at markets, they have this like long, ugly legal disclaimer at the bottom of their landing page of their website, which says something along the lines of, this is a really high risk instrument, be aware. And that's how we should educate people, retail investors and crypto users, about these crypto instruments. Every crypto asset has its own risk level. I think the best part we can do is humanize the language, focus on our utility, because people, largely speaking outside crypto, really don't care about 99.9% of the stuff we talked about. So if I go and tell my mother and father or my uncle or somebody in my family, hey, if you put $10,000 in this instrument, you will have the potential to get exposed to 50% plus APY. Suddenly I have their attention. Okay, great. Now I've done the first part. The second part is I need to warn them, hey, by the way, this is a high risk instrument. Don't put all your savings in it. Be responsible. Get the right level of exposure. I never go tell my friends, hey, buy Bitcoin and just spend everything you have and just buy Bitcoin and just keep buying Bitcoin. I don't say that. What I tell people in my network is, if you have a portfolio and you're building a portfolio, make sure you have exposure to crypto. And I tell them about the high value assets and the thesis behind them. And then it's up to you and your risk appetite, how much exposure you want. Is it 5%? Is it 10%? Maybe you have higher conviction. You want to go a little higher. But I think that's generally how we should all explain this stuff if we really want to track the broader market.
I agree. And so personal financial literacy is kind of one of my little, pet peeves in the United States. And when I see people saying I'm all in on crypto, that scares me, to be honest, because I think that's how people get really, really wrecked. And definitely I'm very pro crypto, but I also am very pro, this is super high risk in a lot of these projects. And I don't think a lot of people are good at assessing risk. And I don't think a lot of projects kind of point that out. But I think that's one of the things that I see as a kind of a thread that weaves through the crypto world, is that you got a lot of people that are not financially literate, that are investing or malinvesting or investing too much in things. And ultimately, I don't like seeing people get hurt because of that. And I wish more crypto projects would say what you're saying, is figure out you should have savings outside of crypto, in other words, and you should have investments outside of crypto. It's prudent to do that. And I'm glad to hear that you, at least philosophically, also agree with that. And I think it's important. And I think you're right. I think we need to humanize that language. I know we're getting close on time, but
banks, by the way, are not doing it any, or traditional brokerage firms are also not like the North Star you want to look at. For example, if you sign up for TD Ameritrade or any of the brokerage firms out there, and you have, say, $100,000 deposit in your account, and you're day trading, you're going in and out of positions. Eventually, very quickly, TD Ameritrade will say, "Hey, by the way, Rob, we see you have 100,000. How about we give you margin? How about you apply for margin so you can trade more?" And I think like getting it that quickly, and I say this from experience. There was a time that I had some disposable income and I started day trading, and it was scary how quickly I started to get that 5x, 10x leverage from one of the brokerage firms that I was trading on. So my point is here, it's not that crypto needs to take that responsibility. These tools have now become consumerized. You now don't have the financial advisor or the middleman warning you, "Hey, Rob, be careful what you're doing here." So now you have access to these really complex instruments that typically were designed for professional traders or investors. Now people like you and I can sign up for it, and within a couple of minutes, we're off to a start. So I think the responsibilities across the board in finance, we all need to do a better job of driving responsible investing behavior.
I couldn't agree with you more on that, Haider. I'm really glad to hear you say that. So, Haider, where can people find out more about you and OKCoin?
So my Twitter is Haider SF. It's pretty easy to find me, but I think more importantly for your audience, I would want them to come on OKCoin and give us a try. We do have the lowest fees, unlike the challenges that other exchanges are facing in crypto. We have really low downtime. Most of our downtime is related to announced maintenances. So what will not happen is the market is hot and you're trying to place a trade and suddenly you can't. Your withdrawal
Coinbase. Oh, did I say that out loud?
Withdrawals are locked and your deposits are locked, or the fees are like just ridiculous. We're trying to build a trusted platform. We have a lot of work to do. We have a lot of high quality assets to add. We have a lot to improve in terms of our user experience. But I can assure everyone that we pay attention to every customer. We're looking at everyone's experience and we're trying to make it better. So if you're ultimately looking for an experience that's trusted and you're gonna be heard, I think I would give OKCoin a trial.
Haider, thank you so much for coming on the show today. I know you're busy and I do appreciate your time.
Thank you. Thanks, Rob, for having me. Talk to you soon.
Great. And folks, I'll have all those links up at robmcnealy.com, and make sure you hit that subscribe button. We got a lot of other great shows coming up, and you're going to want to stick around. And thank you so much, and you have a great day. Thank you for listening to the Rob McNealy program. Make sure you check us out on the web at robmcnealy.com and subscribe to our podcast at YouTube, iTunes, and on the Google Play Store.